This is TWiT.
So, Google's quarterly results are out. And wow. Another, earlier today we did the Microsoft quarterly results. Later today we'll get Apple's quarterly results. Google's earnings smash sales records, particularly in the digital ad market. And this might maybe explain a little bit about Flock and Google's abandonment of the third-party tracker. They don't really need it. They're doing just fine with first-party ads. Thank you very much. First quarter sales revenue $55.3 billion. That's up year over year 34%.
That is so bonkers. And they're like, it's an increase from the diminishment of the pandemic. But if you actually look historically, this is far and away just crazy. 10 years ago, we're looking at sub 10 billion in Q1 revenue. This is quarterly. It's bonkers. Okay.
Quarterly. 31 billion alone, 32 billion alone from search, Gmail, and Maps. YouTube, 6 billion. That's almost a 50% increase. A lot of people staying home and watching YouTube, right? Now, the profit.
And they laughed when they bought YouTube.
I know. Boy, they got their money's worth. Profit. Remember, this is a 3-month period. $18 billion. It's got to be nice to make like $1.5 billion a week. A week.
Well, and they also, think about this. They've been shutting off all of these crazy unprofitable businesses for the last 2 years. So if you think about it, they're reaping what they're
That's what you do, If you're a smart business, you get rid of the dead wood.
Yes and no. You have to have the other bets to help offset the eventual decline of search.
Right.
It's going to happen.
Credit to Ruth Porat, a very good CFO, because the judgment you have to make is this losing money but going to grow, or is this losing money forever? And she apparently has done the right thing and cut the stuff that's never going to make money and has kept the stuff that presumably will make money down the road. This is a profit increase of 162% from last year. Now, remember, last year, as you said, Stacey, wasn't great because the COVID had already hit. But still, this is pretty good. Google will dedicate $50 billion, more than it made, actually, for repurchasing of shares. This is very good for the stock price.
Let's talk about that for a second.
Yeah.
Well, let's talk about that for a second, though. I think that's because there's another story somewhere in the rundown about how, Google and Facebook, all these companies grew so big by making acquisitions, right? And now with the antitrust breath down their back, they're instead of having the cash that they have go toward what I would argue are productive things, they're doing the financial game and they're buying back shares, which helps no one but the shareholders, and doesn't invest in the future of the internet and doesn't buy other companies and give others the benefit of that. And this is, to me, a side effect of the antitrust mood that some folks are in right now. And I think it's actually too bad. I say that as a shareholder.
No, Jeff. I think there is a legitimate case to be made that you're like, hey, you should invest in things. But Google's cash on hand exceeds $100 billion. So when you have that much money sitting around, that is a function of you are accruing. I know in Wall Street terms, there's no such thing as too much cash or too high profits. But when you have that much cash sitting around, you do have to do something with it. And yes, you could say I can't buy any more companies, but I see that they can't buy any more company, or that they might be hesitant to buy other companies. But I also see that you can't deploy $100 billion buying small things. You have to buy big things. And I would say the ability to amass that much capital over a relatively short amount of time is indicative of the fact that they're kind of there's no competition for them.
This is a problem for Apple as well. There is a benefit. There is a benefit to stock repurchase. There are a couple of benefits. Of course, it does increase the value of the stock because you're decreasing the number of shares. But remember that the stock is one of the ways companies like Google attract the best employees. So in improving the stock market, the stock value, the stock price helps you acquire better employees. So there is a direct benefit to the company. And I think you're right, Stacey. It's a problem for any company that rakes in so much cash. They got to do something with it. You can do acquisitions, but acquisitions are more than the cost of an acquisition is more than the money you spend. You've then got to assimilate them. You've got to use it properly. There are many, many cases of companies throwing away money on acquisitions. Microsoft threw away money on Nokia and Overture and took huge write-offs. Yeah. Google's probably done the same. The other thing you could spend money on, Jeff says, is R&D. Here's the graph of Google's R&D spend. And R&D spend has been going up and up and up. It was $27.5 billion in 2020. I don't know what it will be this year. But there's a very steady increase in R&D spending. So it's not like they're cutting back on R&D.
They could pay their taxes.
but all right.
Yeah, but that's up to government. You're right.
They don't have to.
That's up to government to do. That's not up to Google to do.
They're not going to pay more than they're required to.
Right. No, I know. No. I'm just pointing out that, if we tax them appropriately and shut off various loopholes, we might be able to, instead of Google saying, I'm going to invest in my R&D to bring like fiber to the home or invest in wireless networks or whatever, we could actually do that maybe on a federal level.
I'm with you. We should tax the rich. Damn them.
That graph you showed, I figured that would be the draw to get some of the best employees into the company. Just how much money is being invested into the company.
You want to work for a company that's on the move, but
all right. I figure maybe
Ann, I'm going to hire you. And I say, come to work for this great company because it's wonderful. And by the way, we'd like to give you stock so that you can participate in our success. That does add some value to it, right?
I think that would add value to someone that's in a leadership role. I don't think it's for the people that are under, like in the subordinate levels. They're
engineers get stocks
to build something.
Amazon
they get stock and they get rich on it.
Yeah.
I'm saying they get the stock, but I'm thinking the draw would be more along the lines of come join this team and build something big.
That's because you're not motivated by money.
Maybe that's
that's nice, Ant.
I have my moments. Don't get me wrong. I like cash too, but
they're competing against Microsoft, Facebook, Apple, and some small startups. And I'm sure that if you're coming out of college, you got great skills. You are the top 1% of programmers, say, or engineers. You have your choice of any company. You might be saying, well, I should work for a startup because they're going to change the world because they're going to, they figured out how to do blood tests with just a drop of blood. Or I want to work I think if you're looking at a company like Google, there's a risk for Google that, Google, they've done it all. They've been there. What could I do to make a difference at a behemoth like Google?
Right.
So it may be hard for them to acquire people on the market that you describe who are looking for the great company to work for. It might be a lot easier for them to attract people by saying, and by the way, our stock is worth $700 a share and you're going to get 100,000 of them. Welcome.
Okay. Yeah. Now you're talking.
So I've been told, I have no idea. No one's ever offered me a job from any of these companies, but I've been told that is one of the reasons companies want to keep their stock price high because they use it as an incentive to bring people in and probably to keep good.
But even without the stock repurchase, Google stock was headed. Well, actually, it was a little stagnated. You're right. Amazon's was going up. Google's was lost a little steam.
This is why I don't like to talk about stock value so much when we talk about tech in our context, because it isn't always a reflection of how well a company's doing or how well it's innovating.
Agree.
In Apple's case, their stock market value is through the roof, but a lot of that's because they rebuy a lot of.
They bought it back, right?
Yeah. So
they didn't do for a long time.
They didn't, and their stock has gone up a lot more since. And so that's a way you can kind of, but that doesn't tell us anything about the company, just that they're willing to reinvest profits.
My view is the internet is yet young. And so more investment in internet development of new things makes me happy. The problem is Google could go into an entirely new field, but they'd get smashed even if they didn't buy it, they just went into it. They'd be accused of steamrolling somebody else now. And so I wonder whether that money could be invested in entirely new lines of business that would be productive, but won't be now. That's my point.